Good morning, ladies and gentlemen. We welcome you all to the webinar on the automobile and logistic industry with UTI AMC Limited. Speakers for today is Sachin Trivedi. Pleasure to have you. Sachin Trivedi is Senior Vice President and designated as Head of Research and Fund Manager Equity at UTI AMC Limited. He also holds a CFA charter since 2004, conferred on him by the CFA Institute USA. He began his career in June 2001 with UTI. Sachin has 16 years of experience in research and portfolio management. In research, he has specialized in auto OEM, utilities, capital goods, and logistics. Thank you for giving us your valuable time, sir. Our moderator for today is Mr. Pushkaraj Kanetkar, VP Equities at GPL Capital Private Limited. He has more than 20 years of experience in the field of Indian Institute in the Indian equities and is associated with GPL for past 13 years and holds a degree in MBA Finance. He has also won the Best Technical Analysis Award by our Honorable PM, Mr. Narendra Modi. Thank you for joining us.
And thank you, morning to everyone in team GPL. Rupesh, can I share the screen?
Yes, sir, please.
Sorry. Yeah, thank you. Thank you, team. And thank you for logging in on a Saturday to discuss this sectoral fund. MNHCV, which is typically a cyclical because this is linked to the volumes in the freight and related areas. But even if you see all this sector, again, when you get into this sector, this is it may look a zigzag to you, but still this is a sector which is a 6-7% growth industry. But see, if you see here, the FY22, it's a FY20 has seen a significant decline over the past trends, and 21 was no better. 22 that we have seen some amount of growth in the sector, but still long way to go to catch up to the even to FY19 levels. So tractor was an exception. Tractor did well, but tractor is a small proportion of the overall sector. So in volume terms, when we are investing today in this sector, we are investing in a sector when the volumes are already beaten down. Now, there are the reasons for when I said starting 2016 onwards, we've seen challenges, or 2017 onwards, we've seen challenges in the sector, primarily because we have migrated from BS3 to BS4. Any change in technology to the next level. So BS3 to BS4 was actually was properly spaced out. But when globally, if you see a change in technology takes around, or there is a change over time of 5 to 7 years before you move to the next level of technology. But in India, we have skipped one complete generation of BS5, and in 20 we moved to to BS6 standards. This has resulted in a significant cost increase as far as the ownership cost is concerned. So that's point number one. But on top of that, there have been multiple challenges in the sector, which is where the safety norms have come in. So now I don't know whether we realize or not, but in past, airbag was considered to be a luxury. Today, it is compulsory, at least the front airbags are compulsory. That has resulted in significant cost increase. If you are using two-wheelers, bike more than 120, bike or any vehicle more than 125cc requires ABS system, which cost you significant. And if you're using lower than that, there is a CBS requirement. Today, when you go and buy any vehicle in two-wheeler, third party 5-year insurance is compulsory versus 1 year. This results in significant cost increase when you are actually looking to go and buy a vehicle. Similarly, for four-wheeler, it is 3 years. Then there have been multiple challenges. Obviously, we have just come through the COVID, maybe again the fourth wave, there is some bit of increase in there. But they net what all has resulted is that your cost has gone up significantly. And I have a slide later on for the cost as well, how the commodity prices have moved for both the four-wheeler and two-wheeler. And you can clearly see that in last 1.5 years, the commodity price which goes into making the vehicle has shot up substantially. Why Sachin Trivedi is pointing this out? I'm pointing this out today because when we this significant increases, one, the cost of ownership for the end owner has actually gone up, but two, manufacturers are not able to pass on, or they have not passed on this cost fully to the buyer. So maybe there will be some bit of increase further will take place, but most of this increase will go into the profitability of the manufacturers. Now, if you see the larger manufacturers, their gross profit margin, which is, let's say, on an average is around 30 odd percent, has already shrunk to 20%. Now, what it means is that when we are buying or investing in this sector, which is primarily owning these companies, these companies have not just seen the volume pressure, these companies have also seen the profitability pressure. And when we talk about, this is a deck till 21, but FY22 is no different. You see the top line has declined. So this is basically this is a collection or aggregation of auto OEM that we track. And you will clearly see that compared to FY19 in 21, your top line has declined. That's fine because the volumes have gone down and your realization has partly gone up. But your operating profit is down by 35% and your net profit is down by close to 57, 58 odd percent. So today, this gives us a great opportunity to invest in beaten down stock on PE terms. Some of these stocks may look expensive and therefore the sector will look expensive and therefore the fund may look expensive. But this is not fully capturing in the potential in the sector, which over a period of time, when it gradually normalizes, it should catch up and make up for all these losses which has already happened. Now, why is Sachin Trivedi saying that this sector holds an opportunity and why the volume should go back? The volume should go back from here on up to normalized level because already the customer has been postponing their purchase decision. And this has resulted in a big replacement demand, which will start to crop up. Second, manufacturers are also responding by introducing newer products. So when you have newer products, what it means is that if you are not looking to go to the dealer showroom, you will start to visit. Even 1 out of 4 actually converts into the purchases, means a big volume opportunity for the manufacturers. And obviously the new products are priced for profitability. That gives an opportunity for the manufacturers to correct their profitability, and which is where the profit will also get derived for them. And obviously the operating leverage will also help them. So this is in a nutshell about the sector. I will with this. So when we are investing in this sector today, what we are looking for is not just the volume recovery. We are also looking for an operating leverage to kick in. We are also looking at substantial increase in profitability in the sector, and which is where the fund actually holds possibility of giving a decent return or good return to the investors if they enter in the fund today. With this, actually, Rupeshji, I will stop my remarks. I have already consumed some bit of a time. Maybe we can actually open up for Q&A.
Yeah. Thank you, Sachin, for those figures and numbers. And I think that is how the real sense of how the sector would be looking at looks like. Having said that, in my opinion, we are right now at some kind of an inflection point. So to say, I mean, if we see, let's say we take the first movers advantage, like what we saw in case of Tata Motors. I mean, I'm talking with the Indian perspective, and they have really beefed up their EV portfolio very well. At the same time, we see that the company is making losses, although still not in the black as such. Similarly, we are seeing that Maruti, which holds a huge amount of market share, is actually not moving much towards EV in that sense. I mean, recently during the con call on the results, they had stated that it would still be around 7 to 10 years down the line that they are looking at getting through in a full-fledged level. So having said that, at the same time, there is a huge amount of shift that we are seeing in terms of auto ancillaries. This is, like you said, a technology change altogether. I mean, if we put it in perspective, I'm just remembering when we used to have the old heavy mobile phones in 2003 or 4, when incoming used to cost around 15-16 rupees a minute. And from there to having handhelds which are Android driven, the technological shift has been pretty much what you can say disruptive in nature. Similarly, in terms of the auto industry as well, moving from IC engines down to let's say the models where batteries have come into focus. How do you see the whole industry, not just limited to the manufacturer case, but people who are in the auto ancillary industry as well, where they have to really shift from producing old economy, if I call it that way, to getting into the new mode altogether? This is going to be a very titanic shift in that sense. So how do you look forward that whether it would be, let's say, 10 years down the line or 5 years down the line, where do you see that this inflection would really move through and we get into a new trend altogether?
Okay, thanks. If you bear with me, I will actually share a couple of slides. They may actually, I don't know, for the wider audience, may actually you can actually stop me if you want, but I have actually put together a couple of slides to actually make people understand this transition, and I will talk about a couple of slides. So if you see this presentation, this or this slide, this is actually talking about the complete life cycle of emissions, right? Because it's important why we are moving towards BEV is towards emission. So if you look at from the emission perspective, and we can keep revisiting this, both India and China, if you look at if you look at the chart here, the China and India, which are on the right hand side of the chart, if you see on the top, China and India, we are still using more of let's say, if you were to convert to EV, our primary source of electricity will be still largely from coal as a source. Still, it would make sense for us to move gradually towards this, compared to, if you see on the left hand side, Europe and United States, a good chunk of their energy production or the fuel consumption is happening through electricity. But net, if you look at the ICEV, or let's call it the oil-based engine compared to the electric engine, which is there is a substantial reduction in the emission norms. So net, if I were to say, in India, China still makes sense to move towards more for China compared to India, and Europe and United States. But we need to improve towards the fuel source. Now, coming to, and this slide very well clearly says about India, right? The thermal coal still forms 75% of the power that we generate. So still, obviously, in future, we will move more and more towards renewable, which is where even in India, the source of power generation from renewable has increased from 6% to 12%. Sometime in future, it will be substantially different number, much higher number than what we have just from thermal. But still today, the prime source for us is thermal. That's one, clearly we should keep that in back of the mind. Now, you have asked me the other question, how is the penetration happening? So just before I come to this slide, maybe I would want to show you this. So these are not again our numbers. I have borrowed this from Amar Raja company's presentation. So this slide, I don't know if it is clear. I will just, so even and maybe we may or may not agree with the numbers which the company has presented. But clearly our sense is that two-wheelers will be the first one to actually get converted, more so in case of scooters, and which is where you see the penetration right on the left-hand side. On the left-hand side, let me try to use the pointers if I can. Um, uh, just give me a minute. Yeah. So I guess you guys can see this EV penetration, right? So EV penetration is expected to increase. Let's say which is currently around 4% for EV. This is expected to improve substantially to 36-37%. My sense is this may be much higher. And let's say, however, the case may not be so sharp for PV. We can get into the discussion about that. But our sense is for the EV two-wheelers or three-wheelers or LCVs, this penetration would be a lot better compared to passenger vehicle. Even from government perspective, they are not the subsidies are much higher for two-wheelers or three-wheelers or buses compared to the PV. So that's expectation, and there are various reasons behind this. But if you see, let's talk about the penetration number, which you may be interested today. These are the actual numbers. India two-wheeler EV penetration has already reached around overall 4%. Within scooters, this number is much higher because scooter is 30%. It is primarily in scooters and not in motorcycles because of the different dynamics, because scooters are used largely for short ranges within the cities. Motorcycles are used for long ranges, and the build of the vehicle. So largely EV penetration in India is happening more so in scooters. So this is around a 4% in the overall two-wheelers, and passenger vehicle is just around 1%. And in fact, in April, this is further declined to 0.6 because the subsidies have taken a knock. So if you see December, again, we've reached 0.8. We've fallen to 0.4 because in one of the states of, or actually in Maharashtra, subsidies have declined. And then again, they've reviewed it. It was extended till March. We've taken it up. But the key message here is that there is a good amount of subsidy which is already been doled out by the state, which is what is actually resulting in this penetration as far as country is concerned. If we look at how much, so these numbers will differ compared to some of the other presentation slides. But if you look at how much Indian government is giving as a subsidy, clearly this is actually telling you the story that India government is giving as much subsidy as some of the leading states can give. And despite that, our penetration is quite low because in some of these countries, there are multiple other regulations which are in place. So subsidy, the level of subsidy is substantially higher in the country already. It can actually flow southward rather than northward. So that's one constraint, and subsidies are always limited because even if you see, I think there was one slide on China where the subsidies are already going down. So my sense is that directionally how we should think about, rather than getting into the precise numbers, is that scooters or two-wheelers within two-wheeler scooters will be the higher penetration, let's say 10 year down the line. Again, same for three-wheelers, be it for passenger vehicle or be it for commercial use, and buses, because again, buses are largely for commercial use. Passenger vehicles will take slightly longer time. I don't know if I have answered you.
Yes, Sachin, certainly. I mean, moving forward, I mean, through this conversation, I would like to act as the devil's advocate. And I mean, looking at the current scenario, it seems that the real throttle is coming through on the power sector rather than, let's say, the EV pack, or maybe in a way the automobile industry as such, because with growing EVs, we will certainly require larger amount of power to push the things through. Moving from, let's say, the carbon fuels down to something like an electric vehicle, I think this shift would rather happen from the oil producing or maybe the oil marketing companies down to, uh, I mean, the power producers, rather than maybe standalone the automobile industry as such.
So no, you are right. So certainly, as and when we switch completely towards EV, right, the demand for power will certainly go up, and which is where the bulk of the transition or bulk of the generation has to happen. But remember, just to talk in this in some slight technical angle, the let's say if oil has 100% energy, right? Effectively, when we run the car, it is able to capture less than 20% of that. So rest is all wasted. In case of if you were to talk about thermal, and I'm sure some of you are engineer and you will clearly understand that uh, thermal conversion ratio is around, let's talk about coal or other sources. It is somewhere around 36-37%. In better technologies can be close to 40%. So obviously the capture ratio is much better, the efficiency ratio is much better. But when I think our power analyst has already run this, assuming a certain ratio of conversion at this one point in time in future, the overall demand for power is not expected to go up by more than 15 to 20 odd percent. So yes, there will be a switch from oil pumps to battery, which would mean that you need a different distribution system of batteries compared to what we have in oil system today. Which would mean, so one big advantage with the oil is it's a standard fuel which goes in. But in the new battery environment, government somewhere will have to drive the standard batteries, because let's say company X versus company Y, if they are having a different battery pack, and that will create confusion and problem. So one big challenge which you have indirectly pointed out for the EV penetration will over and above requirement of energy, which is the electricity, will also be how do we get the infrastructure done, which is to do with the battery pack, because one is a battery pack which is within your car, but two can also be for certain categories the swappable battery. So there will be whole host of different infrastructure challenges. How do we charge it? Where do we charge it? What will be the cost of electricity for that? There will be lots and lots of challenges. Today, government wants to promote it is all subsidized, but tomorrow when it becomes the mainstream, it will be a challenge. And remember, there's going to be a big loss of revenue for the government. So that's also going to be a big challenge for the government. But we will have to deal with it. But it is not a challenge which we should we will not be able to meet it. It is over a period of time. I think in your opening remark, you yourself said that the analogy of the mobile phone that you give, when the change happens, it will certainly happen. And which is where we are also expecting this change to happen in certain category in a big way. Yes. gradually we'll figure out how to manage this infrastructure challenges.
Yeah, thanks, Sachin. I mean, one more thing that really comes through is because of, let's say, the kind of shortage of coal that we recently saw. There were a lot of news doing the rounds that, let's say, even in the state of Maharashtra, uh, the government did not really purchase the coal that is required to fire these electric plants and all those things. And then there was a shortage, and news were doing the round that maybe we have coal to run the plant only for a week's time or 10 days. So having said that, do you feel that being only dependent on something which is in a way still not really manageable in the real sense, would it be worthwhile making a change, or rather a gradual shift from moving to, let's say, high carbon footprint fuels down to something like CNG? Or I mean, we are also seeing a big amount of push getting in the ethanol front, or mixing it with petrol and things like that. So do you see that that this kind of a shift would in a way affect the penetration going ahead, or you feel we are right now in a very steady uptrend where things would certainly move up as things progress and in a way as technology updates itself? So probably, like you said, in current scenario, the maximum distance a two-wheeler can probably travel is, let's say, 200 odd kilometers using a EV pack. Would that get in a way shifted to something like 1,000 kilometers or 2,000 kilometers, and therefore the shift happens to the next level of automobiles? So moving from scooters, it might move to something like a bike, or something like maybe better in case of buses and things like that, which have a long distance range inbuilt with them.
No, sure. Essentially, there is going to be a shift, which we clearly discussed, right? Dependence on what will be the source of energy. That source of energy can be mixed, and which is where, if you see the government initiative, unlike some other countries where clearly, especially in Europe or China, clearly the thrust is only towards EV. Our government is looking to diversify across, and which is where the CNG kicks in, which is where the ethanol kicks in, and which is where the EV also kicks in. That's the strategy which the government has adopted. Obviously, faster and sooner we adopt the EV, it should be beneficial, but the challenge is the cost of manufacturing these EVs. And at some point in time, we can discuss about that as well. Having said that, source of energy, is coal a big challenge? Coal is not a source of big challenge, because large amount of coal we produce in India, maybe around 10% could be imported. That too because we have not planned or we have not managed it. Remember, I don't want to blame any government, but there is not much serious work which would have happened from a couple of states, because there was lack of planning. And this is not the central, because power is a state subject, and the states have not done sufficient work to ensure, either on the distribution side, because I do track that sector as well, or they have not done sufficient work to ensure that the fuel sources are collected. So it is a timing mismatch. Obviously, in the peak summer, the demand has gone up, and the states were or the power plants were sitting duck without realizing that they would hit problems at some point in time. And obviously, the producing companies cannot respond to this certain surge in demand, because they were not scheduled to produce that way. And which is where, and if you see the data, some of these larger coal producing companies, they have done exceedingly well by producing beyond their capacity. It is just that the demand has surged and the states did not plan it well, and which is where you've seen this certain spike in demand for imported coal. So if you plan it well, I don't think there is a challenge. And anyways, on incremental basis, all our capacities are more towards renewable, that too towards solar, which is where there are good amount of schemes which are already been announced. At some point in time, this will also be towards hydrogen. So there are whole host of technological changes which are happening, which will ensure that the energy will not be a problem. India being the country which is we don't have we have sufficient solar lights available for us, or I mean to say that solar power is available for us. We just need to ensure that we have sufficient capacities, we manufacture it locally, so that good amount of value chain sit back in India. Obviously some part of the raw material for manufacturing them would come from outside India, but that's a lesser of a challenge compared to what we have in the fuel economy. Now, the other question you raised about the range, the problem, sir, in the range is that if you want to add more and more range, which is the luxury, but if you want to add more range, which means that you will have to put more kilowatt or more batteries or the fuel cells in the system, which will make it heavier and which will defy the purpose. There has to be an optimal mix, and which is where globally for commercial vehicle, there is no discussion of adopting EV, because commercial vehicle, the larger commercial vehicles do travel longer distances. And if you are traveling longer distances carrying heavier battery packs, because that's the nature, then it defies the purpose. So there are alternate hydrogen technology being explored for them, right? But if we were to talk about how manufacturers and consumers are responding to these increase in petrol prices today, obviously there is a good chunk of mix which is already looking to adopt CNG, which is where the government has also done a great job in awarding newer CNG areas, and the good amount of work is happening towards that. And CNG has become, let's say, in passenger vehicle, which CNG used to be 5% of the total sales, is already moved to closer to 15-20% at the passenger vehicle level. So CNG is already appearing even in the commercial vehicles, short and intermediate distance, which is ICVs. CNG has formed almost from nowhere. It has already become 30-35% of the overall volume. So the CNG is already becoming an alternate option in some of the pockets. Obviously, the other response is through ethanol mix and other stuff, and which is where the slide actually talks about how it will, in which all areas. So pollution is just one broad term, but then there are multiple layers that we have to look through in this, and which is here you will see EV is, as far as CO2 is concerned, EV is the most or more appropriate technology. But then there are other mix which can actually try to address reduction, let's say CO or the HC or NOx. Again, CNG becomes very efficient in terms of addressing the pollution related issues. So the approach from the government is not to be just dependent on one technology, but to have a broader base approach, and try to give wider options to the consumers and let them choose. So we will see some sort of a response from government, OEMs, and the consumer over a period of time. And obviously within EVs, a lot of new work is happening, be it EV, be it hydrogen. There are multiple new technologies are yet to emerge over a period of time.
Yeah, thanks, Sachin. I mean, one more point that you put through was regarding the revenue of the government and how it gets impacted. I mean, very recently we had a brawl between the governments, whether it was at the center and the state, that who should be actually reducing the duties on, I mean, petrol and diesel, so that it actually gets translated as a discount to the end user. Having said that, a big chunk of this revenue that the government has is coming from the current use of petrol and diesel. And at the top of it, the government is also giving a subsidy for electric vehicles. So having said that, if they need to balance of this a duty that is put on, let's say, petrol and diesel would be translated into something like a duty on probably the charging stations, or I mean some paraphernalia which comes through, which is in a way necessary to run your vehicle in EV mode. So India being a very price sensitive market in that sense, how do you see this really remaining cheaper going ahead? Or you feel that, I mean, these are things that, I mean, you must have seen in many cases, whether it was with the textile sectors or others, till the time that that subsidy was there in some form or the other, the companies did well. But once it moved out of this subsidy bandwagon, the companies started coming into losses. So do you sense that maybe down the line, the overall demand too could get impacted, given the fact that India is a price sensitive market in that sense?
No, sure. India is certainly a price sensitive market, and there are challenges for this to improve. But just to touch upon the point which you have said, which is a real challenge, and this challenge is basically nothing but how much money which the government already makes, and this is supposing that 100% would actually switch to EV, which may or may not happen, and therefore government will have to look for an alternate sources. But just to throw some light, and this is, I think, April data which is TOI has produced. This is very clearly telling us, rather than getting into the nitty-gritty, if retail price for oil was 105, the base price or actual cost of manufacturing, including refining and everything all put together, and the profits of the company was just around 50% of that. And 50% of this is all revenue flowing partly to central government and partly to the state government. So maybe again equally split between the two of them broadly. So both center and the state makes a lot of money. How much is that money? So this is just the center's tax collection. It's if rather than complicating the matter, this is, if you see FY 21-22 is only for 9 months, but easily the center government is making in excess of 3,50,000, and the state government also makes somewhere around the same. So roughly around 6-7 lakh rupees is what both the governments put together make from this. And if oil were to stop selling, which I don't see will happen for next 10-15 years, government will have to look for an alternate sources, and this would mean that the governments will have to start charging, which you already pointed out in your question, that somewhere they will have to start making up for these losses through some alternate route of charging for the car. It can be either straight to the car. It can be through some other sort of tax mechanism, but that will happen. That will make the cost curve of adoption even a lot more difficult. So yeah, that's going to be the challenge. But if we were to further drill down, what is the cost of estimated cost of running a vehicle today? For petrol, this is just the running cost. This is just the fuel cost. For petrol is 6 rupees. For a strong hybrid is 4 rupees, and battery electric is 1 rupee. So this all looks fine. This clearly tells us that we should adopt the BEV, but still, from consumer perspective, it will not make sense for them to actually go and actually convert completely, because the cost of owning the vehicle at the first end itself is quite expensive. So it is a mix. The cost curve has to come down. I have put a couple of slides just to point out why, despite looking the running cost to be very low, what are the real challenges. So let's say if you want to buy a two-wheeler scooter, which is a normal scooter, which is again, let's say somewhere around costing 90,000 or 95,000 rupees. Remember, cost of manufacturing these two-wheelers is just around 55-60,000 rupees. The rest is all what you pay to the government. So we've already talked about that 6-7 lakh rupees cost, which is the cost collected through taxes on fuel, but every vehicle you buy, there is a steep government taxes, multiple taxes, which are further charged, and which is where you end up paying 95,000 rupees for that. If you were to forget about that, the true cost of manufacturing a vehicle which you are buying today at 1,34,000, 1,35,000 rupees of EV, the true cost of manufacturing that is in excess of 2 lakh rupees. I have just put down the slide as to what all subsidies which are available through government, the GST subsidy, the FAME subsidy, the RTO subsidy, the state subsidy. This all gets into through subsidy, and this is actually resulting in your cost actually coming down. And by the way, in this ICE vehicle, I have already, when you see this 95,000 rupees per vehicle, I have accounted for the profit which the manufacturers make. But in this 1,34,000, there is no manufacturer profit. There is no distribution angle in this. Some PE guys are actually funding those losses. So the steepness of the cost curve is already telling you there are multiple challenges in this part to adoption of even two-wheelers, which I am saying that will get addressed. But there are multiple challenges as far as that is concerned. This is another slide which is indirectly telling you like what I was telling you. The big cost in this itself is the battery and the battery management system, but we'll not get into the complication of that. So which is what is making the adoption of EV today, despite looking at this economics, we all get attracted and say that yes, BEV is the way to go, but there are cost challenges. Neither the government can keep subsidizing it. So really the cost has to come down. And remember, today when we buy the BEV, we go with the assumption that this is the way I will run the vehicle, and 5 years down the line, I want to sell the vehicle, I will be able to sell like a petrol or a diesel car. But that's not true. 5 or 10 years down the line, depending on how much you run, batteries need to be replaced completely, and that is an additional cost. Which is where the break-even points are very different. With and without subsidy, it is anywhere between 5 year to 8 year. So and this replacement cost kicks in. So for most of the people, and which is where I said for the passenger vehicle, it looks difficult. For two-wheeler with subsidy, it is a easy adoption curve. I'll just stop this. I don't know if I have answered what.
Yeah, absolutely. Thank you very much, Sachin, for that. And maybe I'll just take a query that has come through from Harshad at our end. Harshad, if you can just ask your question. Well, the question what he has pointed out is whether EV stands in the line of ethanol-based flex engine CNG vehicle types, as government is pushing all of them. Which one is expected to gain a higher traction?
Oh no, we are already paying for ethanol, Harshad. So when you are buying a vehicle, when you're buying a petrol today, I think almost close to, depending on state, but for sure in Bombay, we are already taking that a blended ethanol. Remember, ethanol is another form of tax on most of us. Ethanol blending, it does make sense, but remember ethanol is around 25-30% less efficient. I mean to say, let's say 1 liter of petrol were to give you X amount of energy, 1 liter of ethanol will give you 0.75x energy. So anyways, forget about that. This is a separate discussion. Ethanol has also been done more to subsidize the farmer, because the farm subsidy because of the WTO norm, farm subsidies have to take a rest, and which is where also government is pushing ethanol. But still, nonetheless, if there is an excess capacity, it makes sense. Globally, ethanol adoption is already close to 10%. India is also close to 10%. Through other routes of manufacturing or other routes of feedstock, we are looking to make it 20%, which will at some point in time, I think by 2025, that will kick in. So that will happen. But these are not alternate technology, Harshad. This is basically in the ICE engine or in the petrol vehicle, the fuel that you will be consuming, it is already been mixed. There will be further mixture which will happen. Ethanol is not giving you this 6 rupees running cost that you see. Post ethanol, your running cost will further go up. It will not come down. So this change will not happen. So I'm indirectly trying to answer you. Ethanol will make the running cost more expensive than cheaper.
Okay, thanks a lot, Sachin. I mean, next is a bit of a long question that Kumar Saket has put through. So I mean, if I summarize, he's putting it in perspective that at this juncture, we are seeing both the emotions in the minds of the investor in terms of optimistic and pessimistic. And given the challenges that we are currently seeing, do you believe the sole point of potential for the growth of the sector will be to beat the pessimistic investor inside one's mind for the sector? And if yes, what are the add-on points for the optimistic investor? So, I mean, probably he's pointing to the query that we had in the first case, that there is a fine balance, and what probably could be the USPs that one can take through in case of these electric vehicle, or maybe the automobile industry as a whole going forward, and which would in a way change the whole landscape.
See, when we are investing, we have to stock market is also a bit about sentiment, and we never stay, let's say, like a pendulum which we used to have in our old watches, maybe 30-40 year back. Pendulum never is at the in the center. It is either extreme right or extreme left. That's how the pendulum, and that's how the mood swings keep happening. And so we are never at the fair value. We are either higher or lower, and which is where, but the fact is that we have to keep focusing on the fundamentals. And which is where I said the opening remark, in cyclical stocks, you make money when you are invested at the right time. And what is the right time? Is when there is this one, the market sentiment is bad, two, the fundamental numbers are bad. But when we look at from the longer term perspective, what we are seeing, let's say 2, 3, 4 years down the line, when the things normalizes, what we are seeing is that there will be, as far as the sector is concerned, the fund that you're going to invest, or maybe you are recommending to your investors, is that the fundamentals are likely to improve substantially. Because remember, when I said that the incomes have not grown, but maybe inflation is a big issue for all of us, but what it will result in over a period of time is that our nominal incomes are going to go up. As a collectively, for everyone, it is very important from all the stocks perspective. What we obviously, the real growth in the GDP of 6, 7, 8% that we keep hearing, that's important. But the nominal growth is to what the stocks, most of the stocks, to react to. How does the pricing, and slightly I'm getting into the philosophical part of it, how do the companies make money? When the cost curve is going up, a Maruti or the Tata Motor or any manufacturer, or even the HUL, their profits will definitely go down. Because if my cost has gone up, let's say in 100 rupees of pack, my cost has gone up by 10 rupees, I will only gradually choose to pass it on in various fashions, which would mean that I am taking a hit at this point in time, right? But I will ensure that 100 rupees pack has to be 110 rupees at some point in time, or even better, it should actually take care of my profitability as well. So I will keep raising my price gradually. And when I keep raising my price gradually, even if the commodity price goes down, I will still keep raising that, which means that today my profit margin, let's say for the OEM, has gross profit margin has gone down from 30% to 20%. I will keep taking that beat, and I will want to gradually increase the price. Let's say any one of you go and wanting to buy a Maruti, for example, Maruti Brezza or any other product, you do a booking keeping in mind that it is going to cost me 12 lakh rupees, and certainly because the cost has gone up, and you go and say the manufacturer could let's say you've done a booking at 12 lakh rupees, and 1 month down the line when the stock or when the product is getting delivered to you, because the input price for the manufacturer has gone up by, let's say, of 1 lakh rupees odd, he will not and he cannot come and tell you that, oh, hello, now your price is 13 lakh rupees. It will result in a sharp reaction from the consumer's perspective, which is where the manufacturers are very gradual in increasing the price, and which is where the opportunity in I'm just trying to, they will eventually take the price to 13 or 14 lakh rupees, and gradually the customers will be adopting it. But in the meantime, as an investor in the stock, what you are getting in an opportunity is you are buying the company at a compressed profitability, right? So in future, your volumes will go up, your profit margins will go up, and which is where you will make us, let's say, much higher returns on your NAV, and which is where sentiment is one part. So today, a pendulum is moving the other way and saying that, hey, the profits are going to go down. Let me take down the PE. And so one, your operating profits are going down. Two, your PEs are also getting compressed. There will come the time when the pendulum swings other way, where the profits are rising, and then you are also looking to give a much higher PE. That's what I mean by cyclical stocks, and that's what I mean that we should be capitalizing on this opportunity of investing in this sector.
Thank you, Sachin, very much for that. I mean, just go through to the last question because we are already run out of time. But I mean, as all of you know, that I mean, Sachin is a good player, whether it is a T20, a one day, or a test. So, as a fund manager, how does this Sachin look at transport and logistic more like a long-term play? I mean, in terms of the mutual funds, I'm certainly looking at a short term as 3 years, and long term, anything post 10 years would be long term, in my opinion. So, in your overall outlook, where do you see this thing to really open out? Would it be a test match where one has to really hold on for 10 years plus? Or you feel that T20 or one day is equally good? So a 3 year or a 5 year perspective is equally good for this sector to really get into its rosy self?
So certainly, if we were to call it a T20 or 2020 as 1 year and 3 year as 1 day, one day. So I don't follow cricket very much, but I just try to put that analogy back, and then the test match as a 10 year. Certainly, it's going to be exciting time in 2020, and let's say, but more exciting or extremely exciting match in 1 year's perspective, or let's say 1 day perspective. Maybe I'm confusing. So the next 3 year perspective for me is an extremely positive outcome. Or if I don't want to put a word extremely, I'm positive on this sector, because you will see this normalization of profitability. So 1 lakh becoming, let's say in this example only, a profit pool of 1 lakh can be a substantially higher. Just to give you context, is that in 2019 the profit pool was 2,50,000. So if you see it from the swing perspective, even if the numbers are going back to 2019, it is 2.5x increase in profitability. Now the numbers can be much higher than that or much lower than that, but the numbers are going to be in multiple X, and which is where it's going to be a very, very exciting match. And I'm more excited from that perspective. Whether the test match will be more exciting or not, which is the 10-year horizon. Certainly from 10-year perspective, this is a growth sector, which is where I said this 11% growth for two-wheeler, or let's say high single digit for passenger vehicle. This all is relevant, because even today in passenger vehicle, our penetration level is just less than 3% compared to 50-60% in some of the developed countries, and around 20-25% in countries like China. So there is a long way for us to grow, but we all know the test match are boring. And most of us are excited about the near term and medium term outlook. So as at this point in time, my request for all the investors, or if I were to frame it, certainly you should watch this 1 year match or 1 day match. Even let's say a 2020 match will also be quite exciting, but for sure should not miss this medium term outlook or a 1 day match kind of outlook. Long term, yes, it's a high growth sector, much better than some of the consumer names where we tend to give 50-60 odd multiple. But there, if you should really go and check their volume growth. It does not match this sector. The volume growth of this sector is much higher than some of these areas of toothpaste or other categories. So it's going to be a long. It's a sector for long growth as well, and wherein people can invest some part of their money from long-term perspective as well. But certainly, I don't want people to miss out this near-term opportunity which is there in this sector.
Surely. Thank you very much, Sachin, for that was pretty much informative. And I hope Rupesh from our mutual fund department will certainly punt in on the Mumbai Indians. Having said that we have Sachin at the other end of it. So thank you very much for this informative approach and giving us an insight into the sector as such. I would also like to thank UTI Mutual Fund, as also Niranjan and Swati from UTI, who have really organized it very well. So thanks a lot from GEPL as well as from me personally.
Thank you, Pushkaraji. Thank you, team of GEPL. It was really a good session from your side, and thank you for everyone for taking their morning out and attending this session.